Can you see my screen, please? Okay. All right, thank you. So we are looking at taxation of investment income. Investment here, we are looking at different types of investment that an individual or even a company can do. But of course, because this is under taxation of under personal income tax, it's still under that bucket of personal income tax. So we are going to bring it down to that of an individual. So what is investment income, or what are investment income? Investment income are income received primarily from investment. Investment decision includes purchase of shares, properties, property for lengthy purpose, placement of cash in fixed or other interest yielding account. Then if you buy shares, you're expected to get maybe dividend at the end of the year. You have properties that you're renting as, you expected to get rent. You put your money in a fixed deposit account, you're expected to have interest. You get interest from it. Then there's also some intellectual investment, some intangible assets that you can invest on, and you get royalty from it. The income that accrue as a result of investment decision are called investment income, and they include dividend. They include dividend, interest, rent, and royalty. So these are the various types of investment income that we are going to be looking at today. Somebody has dropped a message. So without wasting much time, without wasting any time, let's just continue to look at the rent income. Computation of rental income chargeable to tax on property, including contractor finance project. So we want to quickly look at rent as an investment income. So I have mentioned that we have various types of investment income, and for the purpose of this class, we are looking at dividend as an income, rent as an income, interest as an income, as well as royalty as an income. And all of these income are under the bucket of investment income. So what is rent? How do we look at rent? Rent, the gain or profit arising from other person that use or occupation or for the occupation of a property, is chargeable to tax. Thus, rental income is generally deemed to accrue to the recipient daily. This is from day to day over those periods covered by the payment. So basically, rent is basically what's the money that comes, the profit that comes in from come into a person from the occupation of property, like the property that a particular person have, and other people occupies it and they pay for it. That money they are paying is basically rent. We all know rent. Rent is part of our everyday life for majority of us. Yes, even if you are not paying rent, in one way or the other, you should have heard that somebody's paying rent and all of that. So the person that is receiving the rent, the owner of the house or the owner of the property that is receiving that rent is an income to that person. The rent received in advance. If rent is received in advance, it will be spent over the period of the rent, provided the period is no more than 5 years. However, if rent received in advance covering a period that is more than 5 years, it will be spread for 5 years. Thus, for tax purposes, the gain or profit arising from rent of property is ascertained by deducting only those expenses that were directly incurred for the purpose of earning the income. Only those expenses that were directly incurred for the purpose of earning the income. Take note of that. So if it is not for the purpose of earning the income, even though it's an allowable expenses, but it is not directly for the purpose of earning this particular income, then it's going to be a disallowable expenses. So before we continue, I want to quickly bring our minds to something that we are looking at: investment income. So for the purpose of this class, we are looking at the tax implication of these investment income. There are other things that you know about investments. There are other processes that are involved when it comes to rent. There are other processes that are involved when it comes to royalty, dividends, and interest. But what we are looking at here is the tax implication on those on those type of income. So I am trying to bring your mind home so that you don't start thinking too many things at a time. Just bring your mind down and say, okay, this particular class is for the purpose of tax. How does this income, how does the tax authority, or what did the tax authority say about this income? How should we treat it? And another thing I want to add is that this topic we are doing now, we are doing tonight, it's also under the personal income tax. Mind you, there are rents, there are dividends, there are interest for company income tax. When a company invests in another company, of course, the company is going to get dividends. But these investments we are talking about, okay, this investment we are talking about is basically for the purpose of personal income tax. Please let me quickly share the YouTube link. Since we have the YouTube link now, I want to quickly share it. Okay, let's continue. So when you receive rent in advance, you are expected to spread the rent over the period, the amount over the period of it. So some of us, most time, in our company or in our workplaces, our company will pay rent, maybe depending on the agreement. Some of the agents now or the property owners will say you pay at the beginning before you will move in, and you are expected to pay when this one expires. You're expected to pay before it start running. So when you pay those kind of rent, you're expected to spread it over the period of time. In accounting, we normally use prepayment to record those kind of expenses. You don't just bucket. Maybe you pay the rent for January 20 million, and the rent is supposed to last from January to December. You don't just bucket into your expenses in January, 20 million rent. No, you divide it by 12, the number of months in the year, and you only expense the portion for that January in that January. The other portion, the other 11 portion, you debit it to your prepayment account. So on a monthly basis, you start like making adjustments, start adjusting it to your expense account. So that is it. So that's it. Then we have the allowable expenses in respect to rent. The allowable expenses are basically as follows. So, like we do in sole proprietorship or even in partnership that we just did last month, you can't say I collected rent of this amount and I should go and pay tax on that same amount. Whereas there are some expenses that I have incurred in order to generate that rent. So that's why we want to look at the allowable expenses in regards to this. So let's quickly look at the one, the tenement rates or land use charge. So land use charge is a kind of tax that you pay for using the land. You pay it to government anyway. So you pay it to government. Also, tenement rate is also a type of tax that landowners or house owners they pay. So that is an allowable expenses because of course you are paying it. And when you are paying it, you are not just paying it blindly, you are paying it with evidence, with proof. So by the time you are deducting it as an expenses, when the tax authorities come and say, why did you pay? You should be able to provide your proof of, sorry, not why did you pay, why did you deduct it? You say you paid because you are expected to pay. The law requests or demands that you pay, and you should be able to provide your proof of payment. Do not just deduct it and you will not pay, because a lot of us know how to do those kind of things. Cost of collecting rent, for example, fees paid to caretaker, estate agent, legal representative. Taking Lagos, for example, you cannot even, most of us don't even know our landlord. Or we know our landlord, but as at the time we were looking for the house or looking for the accommodation, We can't even have direct access to the owners of this house. It's somebody that will take you there. When the person take you there, you look at the house and everything, you're okay with it, you make payments. Sometimes you make payments in two parts. You pay the one for the landlord to the landlord, you pay the one for the agent to the agent. But in a case where you are paying to the landlord, everything to the landlord, and the landlord has to settle the agent, that's an expense on the part of the landlord. So that amount is an allowable expenses. It may be different from what we have, the general view or the reality that we have. But this is on the perspective of you paying the whole amount to the landlord, and the landlord will be the one to pay the agent or the caretaker or whoever that is involved. Then another thing is cost of advertising for tenants. There are real estate companies that are into property letting. They do adverts, they do campaign, they do some of them even do shows and seminars. All of those things they put in money just for tenants to come and patronize them, to come and rent those places. Those money they put to attract those tenants, they are also allowable expenses. Another form of allowable expense incurred for there are expenses incurred for repair and maintenance of the building. Expenses incurred for repair and maintenance of the building, bad debt incurred, interest on money borrowed and employed in acquiring or renovating the property. Interest on money borrowed in acquiring or renovating the property. So if you borrow money, let's use borrow for let's use acquiring, for example. You borrowed 50 million to acquire where can we buy a house in Lagos with 50 million? I don't know. Okay, let me increase it. You borrow 500 million to buy a house in GRA, for example, Ikeja, GRA, and you are expected to pay an interest of 500 of 50 million, that to make it 550. So the cost of that house is basically 500,000. So that interest of 50,000 is an allowable expenses from that you deduct from your rent. And you deduct from your rent. You may not deduct it at once, or sometimes you may not even have the 50,000 as the first as one rent, but you can like spread it out to make the payment. Another thing is commission paid to agent or caretaker. So when the agent helps you to look for the tenant and you pay him a commission for bringing the tenant, is also an allowable expense. Then another one is insurance premium paid on properties. You pay insurance, that premium you pay on properties to insure the properties for safety, and for safety reasons you pay insurance, is also an allowable expenses. Then we have the water rate. Water rate is also an allowable expenses. Disallowable expenses. Disallowable expenses are one, expenses not incurred for the purpose of earning the rental income. So it's like the opposite of the first allowable expenses. Allowable expenses said the expenses incurred for the purpose of earning the rental income. Now, expenses not incurred for the purpose of earning the rental income, maybe you spent it for another thing, is not allowed. Then any expenditure of capital in nature. Any expenditure of capital in nature, if the expenditure looks high, then it is also a disallowable expense. Depreciation of the building. Depreciation is disallowed because capital allowance will be claimed. Then appropriation of profits, including income tax, drawings, reserves. If you withdraw money from personal use as the owner of the house, you now remove it and say, hey, this is my own, I use this from the rent. It's not allowed. You paid income tax from it. Where did you even get the tax from? It's not allowed because we are calculating tax here. Then you kept some money as reserve. It's not allowed. That's for rental income. Then we move down straight to dividend. Dividend is the profit distributed by a company to its shareholders in proportion to their respective shareholdings. However, personal income tax amended dividends as follows. In relation to a company not being in the process of being wound up or liquidated, any profits distributed, whether such profits are of capital nature or not, including an amount equal to the nominal value of bonus share debenture or security awarded to the shareholder. That's for company that is still existing, that the going concern is still there. Then for company that is winding up, the company that wants to cease, any profit distributed, whether in money or money worth or otherwise, other than those of capital in nation, and before or during the winding up or liquidation. So that's the meaning of dividends. It's basically the money you get as a result of investing in a company's shares. You have shares, and they normally calculate it based on the proportion of your shareholdings. That's how they calculate it. So when you receive that money, is an income, is a dividend income, and you're expected to pay tax on it. Nigeria dividends. The money from Nigeria dividend simply means the income received the income from dividend distributed by a Nigeria company shall be deemed shall be deemed to be derived from Nigeria, and shall be the gross amount of the dividend before the deduction of any tax which the country is required to deduct on payment thereof under the provision of the law of Nigeria at the relevant time, imposing taxation on the profits of the companies. Please confirm you can still hear me. Okay, thank you. Dividend exempted from tax. So there are some dividend that you don't pay tax on. Or yes, there are some dividend that you receive that you won't pay tax on. So let's look at them. What are they? The following dividend income are exempted from tax. Dividend earned from abroad and brought into Nigeria by a Nigeria resident in convertible currency and paid into a domiciliary account in a bank approved by the government. If you are bringing the dividend from abroad, obodo oyibo, and you are bringing it into Nigeria in a convertible currency, and you are paying it into a domiciliary account. Convertible currencies here means currency that you are going to convert. So it's not like it's in a Nigeria currency now. It's in a currency that needs to be converted, which is most likely going to be USD. And you pay it into a domiciliary account in a bank that is approved by the government. Also, another form or another type of dividend that is exempted from tax is dividend paid to a person by a company incorporated in Nigeria if the equity participation of the person in the company paying the dividend is either wholly paid for in foreign currency or by asset brought into Nigeria before 1st of January 1987 and 31st of December 1982. So there are three things there. One, the dividend is paid to a person. A person it's paid to a person by a company in Nigeria or a company incorporated in Nigeria if the equity participation of the person in the company paying the dividend is either wholly, so if either wholly is one, or it is paid in foreign currency, or it is by assets brought into Nigeria before 1st of January 1987 and 31st of December 1992, and the person to whom the dividends are paid own not less than 10% of the equity shares of the company. So there are terms and conditions to it. So the person should owe not less than, can owe more, but it should not be less than 10%. Relevant territory in which dividend paid by a Nigeria company arise. Where a dividend is distributed or paid by a Nigeria company, the dividend, whenever necessary, shall be deemed to be derived from the territory in which the recipient of the dividend resides. Where the person, the owner of the dividends, the person that is receiving the dividend, where the person resides. Remember, we say this is a personal income tax. If it's company income tax, it is straightforward, FIRS. But this is a personal income tax, and when you are treating any case of personal income tax, the the uh the issue of place of residence is very key. Whenever personal income tax comes to play, the issue of place of residence is very key. So when it is happening like that, you have to consider the place of residence. So where the recipient of the dividend resides, will be where the dividends would be remitted to. Or where the recipient is not resides in Nigeria. You know, there are cases, some people that they don't stay in Nigeria. The person shall be deemed to be a person resident outside Nigeria and who derives income or profit in Nigeria. Dividends derived by non-residents shall be deemed derived from the Federal Capital Territory. So when the person is not a resident, is not resident in Nigeria, then it will go to the Federal Capital Territory. Are we clear? Are we together? Okay. So let's quickly go to interest income. Let's quickly go to interest income. Can you still see my screen, please? All right. That's fine. So let's go to interest income. So remember I mentioned four type of investment income. I mentioned dividends, I mentioned rent, I mentioned interest, and I mentioned royalty. So for interest, the income from income from any interest or on money lent by an individual or executor or a trustee outside Nigeria to a person in Nigeria, including a person who is resident of Can you hear me, please? Did you stop hearing me at any point?
Yes.
Yes.
Okay. Like, but it did not stay long, right?
At all. At all. Just a
Yes.
second.
Okay. I noticed I was muted. I got a notification that I was muted. I think that's a glitch from the person that is handling uh this space we are using. Maybe that's a mistake from the person. I got a notification that I was muted and no one can hear me. All right, let's continue. So let me take the interest income again. The income from any interest on money lent by an individual. So when you give out your money to somebody, you lend your money out. So it could even be a case of you deposited it maybe in a fixed deposit. Whatever interest that you receive from that fixed deposit, you are expected to pay tax on it. It's an interest. So for interest from sources outside Nigeria, so if the money is coming from outside Nigeria, where an individual resides in Nigeria, the interest accruing to him from a source outside Nigeria is liable to tax in Nigeria if such amount of interest is brought into or received in Nigeria, subject to double taxation provisions if applicable. So if you receive, maybe you're in Nigeria, you invested in the US, and you receive interest in that US, for example, you are expected to pay tax on that interest in Nigeria because you reside in Nigeria. But then there are double taxation principle that needs to be looked at. Double taxation is a topic in advanced tax. Double taxation says that if that interest has been subjected to tax wherever you are receiving it from, you have to look at the double taxation treaty. Maybe the Nigeria and that country has agreement on double taxation and the rest. You want to look at those things, and that will not determine whether this interest will still be subjected to tax or not. Relevant tax authority in which interest paid by a Nigeria company arise. So when I'm in Nigeria, I'm receiving interest, I am based in Lagos, where will I pay my tax to? Or where will I pay the tax on that interest to? When interest is paid by a Nigeria company, The interest, wherever necessary, shall be deemed to be derived from the territory in which the recipient of the interest resides, or where the recipient is not res- resident in Nigeria. The person shall be deemed to be a person resides outside Nigeria or who derives income or profit in Nigeria. The interest derived by the non-resident person shall be deemed derived from the federal capital territory. So when the person that is receiving the interest resides in Nigeria, wherever you are residing on, out of the 36 states, wherever you are residing, that is where you will pay your interest, your tax on interest. But if you are not in Nigeria and you are receiving that interest, you're receiving it from a Nigerian company, or you're receiving it from Nigeria, excuse me, you are expected to pay your tax. It is assumed that you reside in FCT, Federal Capital of Territory. You reside in Abuja, and you're expected to remit that tax to Abuja, to FCT, because you are not resident in Nigeria. Also, interest exempted from tax. Interest exempted from tax. So we have looked at dividends exempted from tax. We looked at do we have rent exempted from tax? No, we only have that of dividend. So the following interest income are exempted from tax. One, interest accruing to a person on foreign currency domiciliary accounts. That one is exempted from tax. Also, with effect from January 1996, 100% of certain foreign income are exempted from tax, provided that such income are repatriated into Nigeria in convertible currency and paid into a domiciliary account in a bank approved by the government. Yeah, we've mentioned this before. So when you have them, we are receiving money from outside the country. That money is exempted from tax. The 100% of the money is exempted from tax, but there is T&C. One, the T&C is that provided the money is coming in a convertible currency, also provided the money will be paid to a domiciliary account, and lastly, the money will be paid to a bank that is approved by the government. Another type of interest that is exempted from tax is interest accruing to a person who is not resident in Nigeria, as specified below. One, the interest on a loan charged on the public revenue of the Federation and raised in the United Kingdom. So for somebody that is not resident in Nigeria and the person is earning interest, that interest will not be subjected to tax, provided that the interest is on a loan that is charged on the public revenue of the Federation of the Federation and is raised in the United Kingdom. Also, another type of interest under this category is the interest on a bond issued by the government. The interest on a bond issued by the government of the Federation to secure repayment of loan raised from international bank for construction and development under the authority of the railway loan. So if the interest is the interest that is received on a bond that is issued by government, then under to secure a repayment of loan that is issued by a bank for reconstruction and development under the railway authority. So when it has to do with maybe construction of railway and expenses related to railway, making railway available and the rest, then the interest will not be subjected to tax. Another type of interest is this: where the Minister of Finance so consent, the interest on any money borrowed outside Nigeria by a corporation established by a law in Nigeria upon terms which include the exemption of such interest from tax in the hands of the non-resident person. So when there is a consent from the Minister of Finance, the Minister of Finance is like the top person when it comes to finance issue in the country. So when there is a consent from it, it actually depends on the the amount of interest we're talking about. It's not every interest that want to Minister of Finance want to be giving approval now. You should know that, you know. But then, sorry about that. Something just took my attention now. Okay, so the next type of interest we have that should be exempted to tax is the interest on deposit account, provided the deposit into the account are transferred and are transfer only made up to up of foreign currency. So when it is foreign currency, maybe you have a fixed deposit on foreign currency, the interest on that will not will be exempted from tax. Also, where the Minister of Finance so concerned the interest on any money borrowed outside Nigeria, this is double I double pasted this, I think. I've explained that before. Interest on any loan granted by a bank on or after January 1st, 1997 to a person engaged in agricultural trade or business. So another type of interest now is a interest on a loan borrowed from a bank by a person engaged in agricultural trade. If you are into agricultural trade or you're into agricultural business and you borrow money for the purpose of that business, so not that you borrow the money for another thing, no. So for the purpose of that money, the interest on that loan, the person receiving the interest, the person will not pay any tax on that interest. Also, the fabrication of any local plant and machinery. If you use the interest is accruing from a loan that is used for the fabrication of plants, local plants and machinery. Also, that interest will not be subjected to tax. Then any cottage industry established by the person under the family economic advancement program as working capital, if the moratorium, sorry, if the moratorium is not less than 12 months and the rate of the interest on the loan is not more than base lending rate at the time of the loan, at the time the loan was granted. So that base lending rate is like the CBN approved rate that is used. So whenever you want to do all of this, the tax authority will go and check for the CBN approved rate and compare it to see if this your interest actually fall under this category and it meets up with the necessary requirements. Another type of income under this employment income is the royalty income that accrue from royalty. We have looked at dividends, we have looked at rent, we have looked at interest. So we want to quickly look at royalty. How do we treat royalty income? I want us to finish this thing before 10, so we can use the remaining time for calculation. So for royalty is a payment to an owner for the use of property, especially things like patent, copyright work, franchise, or natural resources. So if I have a name, maybe a brand name that is selling, and you want to use my brand name to sell your product, you are expected to pay me royalty. And when you pay me that royalty, me that is receiving that royalty is an income to me. So because it's an income to me, I am expected to pay tax on it. Because it's an income to me, I'm expected to pay tax on it. So a royalty payment is made to the legal owner of the property, like the patents, copyright, and others, by those who wish to make use of it for the purpose of generating revenue or other such desirable activity. In most cases, Royalty are designed to compensate the owner for the assets used, and they are legally binding. So there was a time I walked up to a mobile filling station. My company wanted to sign an agreement or an arrangement with them for fuel supply. I Please give me a second. I have a call. Let me quickly take this call. Sorry, my somebody is asking if my mic was muted. I said you should give me a second that my phone was ringing. Did you not hear that? Are we still together or I'm talking to myself? So I'm
We
wondering why
can
the
hear
person is
you.
asking if my mic why if my mic was muted. That means the person is not paying attention because I took permission before I took that call. Please let's continue. So I was explaining royalty, that royalty income is a kind of income that is derived from the uh, that an owner gets from the use of his or her property. And I made mention of patents, copyright, franchise, and other things. If I have a brand name that is selling, is moving, and you want to sell using that my brand name, yes, you are going to pay me. And that thing you are paying me is called royalty. You're paying royalty to that name that you are using, because you use it to generate your own you're using it to generate your own revenue. So us that one that is receiving that income, I'm expected to pay tax on it. So that's that for royalty. Then we have the chargeable income. Chargeable income are often expressed as a percentage of the revenue obtained using the owner's property, but can be negotiated to meet specific needs of an arrangement. The use of royalty is common in situations where an inventor or original owner chooses to sell his or her product to a third party in exchange for royalty from the future revenue that it may generate. Of course, if the person is not generating revenue, the person cannot make payment, the person cannot pay you. So because the person is generating revenue, you the person is expected to pay you. Most time royalty are in percentage. It's not just one of payment. It will be a particular percentage of your revenue, or let's say your profit, on a yearly base. All of these have legal backing, they have legal agreements and the rest that would have taken place. So like I said, this class we are looking at the tax implication. There are other things that will happen when there is a royalty agreement. We are not in a law class, so we'll just do the one that concerns us, which is the tax part. If you want to read about everything about royalty, how it works, you are very much free to read. Go and read it. Also, we have the income exempted from tax. The royalty income, the part of the royalty income or the type of the royalty income that is exempted from tax. Royalty earned from abroad and brought into Nigeria shall be exempt from tax, provided that such income is brought in a convertible currency, is brought in a foreign currency, into a domiciliary account that is approved by the federal government of Nigeria. So when it happens like that, it will be exempted from tax. But if it is not, then it will not be exempted. Though. It will not be exempted from tax. So that's is the royalty. We have looked at the exemption. We looked at the tax implication, and we also looked at the meaning of royalty. So basis of assessment and payment of taxes under investment income. So when you have a topic in taxation and you want, basically I already brought our mind to the fact that this is tax and we are looking at the tax implication. There are some key things you want to look at in that topic. The first of all, in this taxation level, normal skills tax, one of the basic things you want to look at is this basis of assessment as it affects that particular tax. There are some that are actual, there are some that are preceding year. So for that, for investment income, for all the investment income, they are subjected to tax on the preceding year basis. The basis of assessment for dividend, interest, rent, royalty is on the preceding year basis. The assessable income from each year of assessment in the income of the year immediately preceding the year of assessment. So when you are in 2025, for example, or as we are in 2025 now, the dividend we are looking at is the dividend from 2024. The rent we are looking at is the rent from 2024. So that is preceding year basis. That's the year before the year of assessment. The assessable income from each year of assessment is the income of the year immediately preceding the year of assessment. For 2025 year of assessment, the income we are looking at is the income from 2024. For 2024 year of assessment, the income we are looking at is the income from where? 2023. That's the preceding year basis. So we want to quickly look at frank investment income. Dividends received by a company after deduction of withholding tax at source by a paying company is regarded as frank investment income of the company receiving the dividend. So that is to say, is how will I explain it? It has it's been subjected to tax. Tax has been deducted. You know, most time we received uh, dividends are paid at net after withholding tax had been deducted. That's when dividends are paid or how dividends are paid. Okay, I think that's all for the theory parts of the class. We'll just move over to calculation. But before we take calculation, I want us to take the next 5 minutes to look to take questions. If you have any question, please let's hear your question. Akiwande. Akiwande, can you hear us, please?
Yes, I can hear you. Good evening.
Good evening. Please let's hear your question. Let's have your question.
Yeah, I wanted to just confirm if these dividends, normal dividend, they are tax deductible, right? Apart from the ones that you gave that they are not tax deductible.
Okay, please no problem. Let me hear you again. Sorry.
I said the normal dividend that shareholders get, they are tax deductible apart from the exceptions you gave.
Yes. So for questions like this, most times, if the dividend has been subjected to tax, so normal dividend, for example, if I get your question right, if a company is paying you dividend, the dividend is going to be on net. The company would have deducted withholding tax from that dividend. If you have a shares, if you buy shares with a particular company now, the company is going to deduct withholding tax before dividend will get to your hand.
So
Because the company, is
are we
that
still
what
going
your
to
question
tax?
is?
Yes, are we still going to now tax it again when we are computing this
No,
taxation?
no. You will not pass it. You know this is exam. So the ICANN is trying to test your knowledge on these things. ICANN is not just all about passing the exam. Oh. They are trying to let you know how to do these things in reality. So we are not going to, if the question come and they say the dividend is net, you are not going to charge tax on it again. So sometimes for the purpose of calculating, what we do, we gross it up. Do you get? We'll gross it up. I just got a notification now that the person that created this link for us, our laptop is going to is going off. Not my laptop, oh. My laptop is charged. But the person that created the link, her laptop is going off. And if her laptop goes off, we may possibly, because she's the host, not be able to continue this class. So at any point when you see that the class has ended, just take it that the laptop has gone off. We'll probably complete this class on Friday next week. Are we okay? I'm just giving a formal announcement. I wanted us to solve a question, but then, uh thank you. I wanted us to solve a question, but then she just notified me now that her laptop was off. The person that was preparing link for us, the person is not available, so I just have to meet this person to prepare for us. And I don't want to do it outside the Apex platform. I don't want to use my own email to prepare it, so that the recording and everything can be available. So wherever it just goes off, please let's just take it like that for today. Um, I'm sorry about that anyway. So Faith, Akinwande, are we okay now?
Yes, ma. So we are going
Do
to
we
change
have any other question?
when we gross it up like that. We are still going to charge tax on it. We are still going to deduct normal tax deduction from it.
So when we gross it up like that, we gross it up for just for the purpose of calculating what uh the actual income is. We want to add back disallowable expense, depending on the how the question is set anyway. In most cases, if they give you a net profit, you want to add back disallowable expense. If they give you in gross profit, you want to deduct allowable expense. Do you get? So for example, if they give you the question in net profit, so you want to pick your net profit, you want to add back disallowable expenses. At the end of the day, you want to get the chargeable income. So by the time you get the chargeable income, you will not remove that dividend. Or by the time you get the chargeable income, you will not charge it to tax again, because the question already said that dividend has been subjected to tax. The only concern here is that most time when the dividend is subjected to tax, the allowable incomes that are there, the disallowable that you add back, you may want to get the elements and subject them to tax separately. I don't know if you understand, if you get it. Maybe when we do practical,
Yes,
when
when
we
we
do a calculation on
right.
it, when we put figures on it, it will be clearer. Do we have
Yes.
any other question, please? Do we have any other question? Patrick, please, can you hear me? Let's have your question, please. Please excuse me. Hello? Adewale, please, let's have your question.
Okay, thank you. Yeah, my question is you explained something now that if the question comes in form of net profit, we add back the salable expenses. And if it
Yes.
comes with in form of gross profit, please, I want you to explain that two aspects very well.
Okay. So personal income tax, the ones we have been doing, we know what is allowable and what is disallowable. And in most cases, they will give us the account of the person. Let's take that of the partnership we did last month. They gave us their accounts, the statements, the profit or loss, let's call it that way, that they had for a particular year. And you notice that in that profit or loss, the accountant, the financial accountant, let me use financial and tax so that we can understand it better. The financial accountant had deducted some expenses, which the tax accountant say no, these expenses are not allowable expenses. So you want to pick the net profit that the financial accountant had prepared and have arrived at, and say, okay, this is the profit of the business, but there are some expenses that we are deducted to arrive at this profit, this net profit, that are not meant to be deducted. You want to add it back. By adding it back, you will increase the net profit before you do your tax. Now, when the question is in gross, so when the question is in gross, that means the accountant has not prepared. It's just your revenue as it came in, or your rent as it came in. They have not prepared. So you will now see the list of expenses that are meant to be deducted. So you take the gross, you deduct the expenses to arrive at your chargeable income. I hope this is clear.
Yeah, perfectly.
Okay. So depending on how the question come, that's how what we determine. That's why the understanding is needed, not cramming. You need to understand it so that wherever way they want to trick it, you are, because of the understanding you have, you'll be able to pick, to know where to start from. Thank you. Let's continue. Mm. Okay, so to continue with the class, I have a question I screenshotted. I have a question I'm going to share with you guys on the group. Maybe we'll just explain the question and I will work on the solution and share it on the group, because of the fact that our system, the host system, is going to shut down. She said she has just 7% now. So any moment from now it will go up. So I just want us to look at the question, very analyze it together, and I will solve it and drop the Excel with you guys tonight before I sleep. So help me God. So I have the question now.
Amen.
Check your WhatsApp group, please. Check your WhatsApp group for the question. Can we see the question? Yes, I think the question. Look at it very well. Let's look at it together. Thank you. So I'll be reading from my end. Mr. Chukwuemeka Okoye completed the construction of his building, a two-wing. Okay, just give me that. Just end this. Complete the class first. Mr. Chukwuemeka Okoye completed the construction of his building. Somebody said the question is not showing. No, is it the person's network? Check your WhatsApp group. I'm not projecting question. Check the WhatsApp group. Or the person that is saying question is not showing. Please check your WhatsApp group. Mr. Chukwuemeka Okoye completed the construction of his building, a two-wing duplex located at Gwagwalada, Abuja, on December 31st, 2022. He rented out both flats with effect from January 1st, 2023, through an estate agent, and received rent for 2 years. He made available the following details. He made available the following details of his income and expense for the relevant period, 2023 and 2024. Remember, the house was the building was completed as at December 31st, 2022, and they rented it out the next day, according to the question. I'm not the one that set it. The 1st of January 2023. This question is like an actual question of January to December. So it's very simple. Now we have the rent it was received in gross. We have the expense, the list of expenses there. From the rent and repair and maintenance, water rate, agents commission, professional charges, insurance, caretaker wages, tenant rates, tenement rate. There are additional informations to the question. The first additional information said that capital allowance agreed with the relevant tax authority for 2024 and 2025 were 480,000, and for 2024 and 2025 we have 480,000 and 120,000 respectively. So 480,000 is for 2024, while 120,000 is for 2025. So these are the capital allowances that we are going to use. I told you that most personal income taxes question, the capital allowance will just be given to you at a flat rate. You just pick it and go and use it. But in a CIT question or capital allowance question, you'll be seeing something like the cost of the building is this. Just know that you are going to compute your capital allowance yourself. God bless you, you go and pick that cost of building. You're on your own. As your capital allowance, you are on your own. Once you see anything that the building was purchased this so day, so time, just know that it's a fresh question that requires is it fresh now or virgin? Yeah, that requires you to go and compute a capital allowance by yourself. You do initial allowance, annual allowance, whatever. You go and do all of them. You have done that before. Mr. Michael had taught you all of that. So, but in this case, it is simple. You just go straight and pick your figures. Also, repair and maintenance comprise of depreciation, repair of tenant's bedroom, repair of Mr. Chukwuemeka's residence. So those are the repair and maintenance. So you want to ask yourself, is depreciation that is part of repair and maintenance, is it an allowable expenses? Repair of tenant's bedroom, is it an allowable expenses? Also, repair of Mr. Chukwuemeka's residence, his house that he had to this repair, is it also an allowable expenses? You want to consider all of that. Lastly, tenement rate includes tenement rate of 5,000 naira and 20,000 naira paid on the private residence of Mr. Chukwuemeka for 2023 and 2024 respectively. So we have tenement rate in the question. 2023 is 25,000, 2024 is 32,000, sorry. Now they are not telling you that out of this 25,000 for 2023, he paid for his personal rent for 5,000, and also out of the 32,000 for 2024, he paid for his own private residence also for 20,000. Of course, you want to ask yourself, are they allowable or they are disallowable? As a matter of fact, when you see additional information like this that is affecting the account, shine your eye very well, because some of them are set up anyway, but some of them are most of them are disallowable expenses. That's why they will call it out like that. But if they have not called out anything on tenement rate, you know that tenement rate is allowable expenses as it is. Required: compute the amount of rental income accessible to tax for the relevant years of assessment. So in this question now, we are given the rent at gross. Somebody should unmute and tell us, what do we need to do? If you have this question in front of you, come that day, that's his first day, November 18. You have this question in front of you. Somebody should unmute and tell us what he or she will do. Yes, I'm listening. Are you unmuted?
Okay, good
People
evening.
should not fall my hand now. With all the explanation. Thank you, Favor, my namesake. Good evening.
Okay, first of all, I think we'll have to adjust the profit because of there are some disallowable and allowable
Okay.
in their question first before we can proceed.
Did you read the requirement of the question?
Yes, I did.
Okay. So where are we proceeding to? Are we still here, Favor? You've muted yourself. Okay. Thank you for that contribution. Akinwande, you want to say something? Let's hear let's hear from you.
Yes. I feel we'll start from the rent received, the gross amount.
Okay.
So from there, um, we're going to add disallowed expenses.
We want to add disallowed expenses. So what do you
Yes.
think are the disallowed expenses that we are adding, and why are we adding disallowed expenses?
We're adding depreciation. We're adding this rent for Chukwuemeka, which is personal repairs for Mr. Chukwuemeka. We're adding I think that's all. Rent for Mr. Repairs for Mr. Chukwuemeka and repairs for of tenants bedroom.
Good evening, ma. Good evening, ma. Hello, ma.
Oh, we are not adding disallowed expenses, so we are lessening it from the income, from the rent. We are not adding it. We're going to let it.
Akinwande, are you the one talking?
Good evening, ma.
Ask if the person can switch to down.
Okay. All right, please. Sorry for that. The system has not gone off. We are still here. Somebody said it's like the system had gone off. We are still here. Please, who is behind the Apex Professional account? I can see somebody logged in with Apex Professional. Who is behind it, please? Do we know the person that is behind the Apex Professional account? Okay, let's continue. So Akinwande, let's hear from you again.
Yes, I said we're starting from the rent received, which is gross. So we are going to
Mhm.
less the allowable expenses from the rent received
Okay.
to get our
Thank you
net
very
rent
to
received
get our nets. Okay, that's
that will be
very good.
charged to tax.
Okay. Thank you very much for bouncing back. But you were already leading us astray. Yusuf Ola Olaoluwa. Let's hear from you, please.
Yeah, good evening, man. So what
Good
I feel is
evening,
going to
sir.
happen here is the first thing we have to less before getting our allowable expenses to get our net rent that we can expend every things from is the tenement rate. The tenement rate alone. We have to deduct that, and maybe repairs of the tenant bathroom. We less that before getting the net rent received or something like that before we can now start deducting our allowable expenses.
So I want to understand. Is it we have to less those one before deducting our liable expenses? Is that what you said?
Yes, ma.
Okay, thank you. Do we have any other person that is raising his or her hand?
Good evening, ma.
Good evening, sir.
Okay. I'm thinking that since the rent was given to us in gross,
Mm-hmm.
then the additional information should be done as working.
As what?
Tenant, working, like as
Okay.
tenement rate. Those tenement rate that is not related to the actual property we are talking about, we
Mm-hmm.
take it up from those line items. Then
Okay.
we now we now minus all the expenses from the gross profit. Then before we get the taxable uh, profit, then we can now from there you can now uh, tax based on the rate that is appropriate for tax.
All right. Thank you very much. That's
Good evening.
pretty. Good
Good
evening,
evening.
please. Good
Yeah.
evening.
Okay. Yeah. So this question actually is given to us in 2 years, 2023 and
Okay.
2024. So,
Okay.
like we said, that is our preceding year basis. So if you are computing it, we have 2024 and 2025. All right. So as the relevant years, and the rent is given to us as gross. So that means they have not removed the expenses. So we have
Yeah.
to left the allowable expenses. So for 2023, which is 2024 assessment year, that's what we use. Then for 2024, we use 2025 as the assessment year, and then we less all the allowable expenses from it. So
Mm-hmm.
then we'll now remove our capital allowance from it
All
to get the
right. Thank
chargeable expenses, chargeable income.
thank you
Right.
very much. Thank you very much for that. That was nice. Do we have any other person that has not spoken before? If you have spoken before, I'm not calling you again. You can drop your hand. Thank you all for the attempts you gave. You guys tried, you all tried. But the last person that spoke, thank you so much. So first of all, the question was given on 2023 and 2024. And because dividend is a type of investment income, and we saw where we were reading through the note, we're going through the note that investment income, they are charged on preceding year basis. The income for 2023 will be charged in 2024 or will be assessed in 2024. The income for 2024 will be assessed in 2025. So, on that note, our year of assessment or our relevant year of assessment in this question will be 2024 and 2025. And because the rent was given at gross, it has not been subjected to tax. We will do what? We will we will take up that gross figure for each of the months. The rent amount received for 2023 will be what we are using for 2024 year of assessment. While that of 2024 is what we are using for 2025 year of assessment. But look at it, the two rents are the same thing. The man did not increase rent. He's a good person. He's landlord in some places. After you stay 1 year, before you finish 1 year, they've increased it. But let's continue. So we add back those allowable expenses. So when we're adding back those allowable expenses, we want to look at our additional information and we want to be careful in picking our allowable expenses. For example, those additional information that have those expenses that have additional information that the additional information are related to. Like I explained to you the other time, when you are reading your question, especially the additional information, you want to match them. Additional information one, you can just put related to these expenses, rent expenses, or you want to just go to, sorry, you related to maybe water expenses. You want to just go to water expenses and write in front of it additional information one. So you know that when you are treating rent, you are treating, okay, we are doing rental income. Let me not use rent again. Rent is actually a type of expenses in other type of tax, personal income tax. But because we are doing rental income, let me not use rent. So when you are treating repair and maintenance, for example, you already know that repair and maintenance has additional information. So you want to adjust based on the additional information. So that's that. So when we pick the gross income, we add back all the allowable, we deduct all the allowable expenses from it. But while we are deducting the allowable expenses from it, we want to take note of the expenses that has additional information, especially those ones that say for this person, for this thing and this one is for his personal use. This thing and this one is for depreciation. This one and this one is for that. So let's quickly jump into it since we are still up. Please confirm you can still see my screen. Can you see my screen, please? So we want to get the rent received. Okay, let's continue.
Sorry, good evening, everybody. Your lecturer's laptop just went off. So I'm going to stop the recording now. She's going to probably get in touch with you. So her laptop is down now. So I'll stop the recording. then the recording will be shared, then you continue later. A laptop is down. So
Mr. Kabiru, can you hear me, please?
yes. Okay, Miss Favor, you are here.
Yes, I'm here. So Jamila helped me to generate link.
Yes,
It's
he called
Jamila's
me now.
laptop that is off.
Okay. What
So
are we going
mine,
to do now?
I was thinking when I finish, I will alert you if you can log in and stop the recording.
Okay, me, I'll be here. I'll be here. I'll just, but the problem is that I'm also having an SBL class now. So I just thought that I'm going to log out. But how am I
Okay.
going to do it now? Because
All
how am
right,
I
let's
going
do
to
it this way. We've already analyzed the question we're about to solve. So I'm going to just give them, solve it and send the Excel sheet to them on the group because we've analyzed it together already.
no problem. Okay.
So
So
we
okay,
can
when
end
you
the
are
class.
done, I'll log out. I'll log out. When you are done, I'll just send a message to me. I'll just send a message to me.
Okay, sir, that's fine.
I'll log
Okay,
out now, so you can continue. I'll just
okay,
come and stop the record. Yes.
that's
You
fine.
can. All right. Sir.
Okay, thank you, sir.
You're welcome. You're welcome.
Okay, let's continue. Can you see my screen? Can you see my screen? Can you see the Excel sheet I'm using? Okay, then let's continue. So first of all, you want to pick out the net. Since it's in gross, the rent rather. Since it's in gross, you want to pick out the rent. Then you want to look at the allowable expense. Sorry, the expense that you have. Yeah, of course, the allowable ones. The ones that are not allowable, that's where you come in and you do your workings. You just want to do a very small working done. Just to this question is a very simple question. You want to do your workings under and do the small workings there. So the first allowable expense we have on the question is what? From the question, what's the first expense? We have the repair and maintenance. So repair and maintenance is 220,000 for 2023 and 450,000 for 2024. Please hope you know why 2023 is not appearing here again and 2025 is not introduced. Hope we know why 2025 has not been introduced yet because it's on a preceding year basis. So the year of assessment has to be for the next year for each of the year that we are computing for. So repair and maintenance is the first allowable expense we have.
But we have additional information for that.
For what? For repair and maintenance, right? There's additional information that we are going to treat it. You people are going to tell me the ones that are liable in there, and you give me your reason. Repair and maintenance. So the repair and maintenance is 220. Are we bringing the whole of 220 for 2021? For 2024, rather. Are we bringing the whole of 220 for 2024? Who is
No, ma.
answering? So
No,
what
ma.
are we bringing?
We'll do the working and take the part of it that is, he said 100,000 is depreciation for
Mm-hmm.
2020.
Is
will
depreciation
minus
allowable or not?
is disallowable expenses.
Okay, fine.
Will
The
minus
next one
will
is
minus
what?
the- then repair of Mr. Chukwuemeka's residence,
Okay,
120,000. That
okay.
means the repair and maintenance expenses for 2024 year of assessment is zero.
It's zero. Good. Because that of Mr. Chukwuemeka's house too is also a disallowable expenses. So we are done with 2024. For 2025, 450,000 is the expense for repair and maintenance. And we have the breakdown in the additional information. So somebody else, another person should analyze that for us. Where is favor?
Okay, ma.
Okay.
So can you hear me, ma?
I can hear you.
So for 2024, that is for 2025, so the depreciation 450, we'll remove depreciation, is not allowed. Then we also remove repairs of tenants, bathroom 180 is also not allowed. The repair of Mr. Chukwuemeka residence too is also not allowed. So which is also
Another
zero.
zero. Good.
Yeah.
Thank you. So the next
Right.
allowable expense we have here is water rate. So is water rate an allowable expense or not?
Allowable.
Okay, allowable. So what's our water rate in the question? For 2024 will be 82,000, right? Then for
Yes.
2025 will be 105,000. Okay.
Hello, ma.
So the next we
Can
have is
I
what?
ask a question?
Yeah, that repairs of tenant bedroom.
Okay.
Hello, my favor, can I ask question?
Would you please hold on? Let's finish the question, please. Just hold on. When we finish the question, you can ask. If it's something that will require us all to adjust, don't worry, I will adjust. Water rate, we've done water rate. Agent commission. Somebody should please tell us, is agent commission an allowable expenses or not?
It's allowable.
Allowable.
Is
Allowable.
It's
allowable,
allowable.
and there is no additional information about it. Well, I think we should do these ones in the first column, so we can have a neat account. So let me cut this. Okay. So we'll do total and bring it under this ones. How much is this? Is for okay, the same amount. Even the agent amount is the same thing. Then we have a professional charge. Professional charge, is it allowable?
Yes.
Is allowable. And is there any additional information about it?
None.
Okay. So how much is professional charge? 100,000. Oh, sorry. Okay. Uh caretaker wages. Is it caretaker wages? Okay, insurance. Is insurance allowable or not? Insurance is
It's
allowable.
allowable.
Caretaker's wage.
Allowable.
Caretaker. Caretaker's wage is allowable. 18,000. Tenement, is it tenement rate? Tenement rate is also an allowable expense, but there is an additional information about it. So let me come down and do workings for tenement rate.
Sorry, ma. Professional charge for 2025 is 150,000, not 100,000.
Oh, did I use 100 for both of them?
Yes.
Okay, thank you. See why you need to pay attention now. So you can correct me. I make mistake. Okay. So for tenement rates for 2023, we had 25,000. That's what the expense is. Why for 2020 we had 32,000? Is that person talking to me? So for private use or private residence, amount paid on private residence.
You wrote 320,000 though.
This my zero be coming down. Private use. The amount that is paid on private use is 5,000 under this one. Why for this is how much? 20,000. So because those 5,000 and 20,000, we are not using it. It's not for the purpose of the business or for the purpose of generating that income, not business now. It's not for the purpose of earning that income. It has to be removed. Hope we are clear. This one is very simple, so it should be clear. Tenement rates. This one is 20,000. This one is 12,000. And that's all. And that's all. I'm trying to sum it up now. So we've been able to calculate our chargeable income. This minus this. Oh, sorry, accessible income first, because we still have capital allowance. Capital allowance is the allowable expense in place of depreciation. So these are our accessible rent. So now bring in our capital allowance. For capital allowance for year one, how much is it for the year 2024 is what?
480,000.
480,000. Okay.
And 120.
480,000. The other one is 120, Abby.
Yes, ma'am.
All right. Thank you. 120.
There is one line I think that missing.
Okay. So by the time we subtract our capital allowance from our accessible rent, we have our chargeable rent.
Mr. Raphael, please mute your mic, please. Mr. Raphael.
Okay, I think that's the end of the question. We're done with the question, right?
Ma, can I ask my question now?
Yes, ma, you can ask your question now.
Okay, I don't understand how we calculated the repair and maintenance for it to be zero. I don't understand. I thought allowable expenses are those that are wholly and involved in the making of the income. So why is
Yes.
it zero? I don't
Oh,
understand.
okay, thank you, ma. They are holy. You did not complete it. You just drag us to rain and you left us somewhere. They are holy, reasonably, exclusively, and what necessarily. I wonder why they didn't even mention rent in this transition of investment income. The whole of it, the theory part, they didn't mention it. But then rent is rent everywhere. So if you look at the repair and maintenance, there is an additional information that is attached to it. So for the fact that the repair and maintenance is standing on the account or in the balances, they didn't call it account, the balances that was shared with us as the expenses. The fact that it's standing there does not mean it's going to go into the it's going to be the allowable expenses. So if they had not said anything about it, then we'll pick it because of course repair and maintenance is an allowable expenses. But now they have said a lot of things about it. So it is what they said about it that net it off to zero. Like the one they said, part of it is depreciation. So the person that prepared the account did not have chart of account for depreciation. The person was posting depreciation. For example, I'm just saying, the person was posting depreciation under repair and maintenance ledger. And at the end of the day, it was found out that the total in repair and maintenance, there is depreciation. There's the element of depreciation there. So you have to remove it. Depreciation, of course, is a disallowable expense. So it has to leave. The other one they said is for the person that the owner of his personal house. By looking at the house that is renting house to do business, investment income, owner occupied income. Which of the IAS do that one at that time?
But ma, there is the place of tenants this thing
IS
there too.
40.
IS 40. Yes, IS 40. Repair of what?
Tenants bedroom also. I saw it's there.
It's supposed to be allowable expenses, Abi.
Yes.
So it depends. It actually depends. Even me, I thought of it too. It's supposed to be allowable expenses, but it depends. There are some agreements that we, or some tenancy agreement that the landlord and the, though there's no explicit agreement here, so we just decide to put it in one part. On another question or on another case, it can be unaliable expenses. There are some tenancy agreements when you do your repairs by yourself, and there are some that the landlord will be the one to do it. There are some that the tenant will do it and the money will be calculated as rent. But this question did not really give us explicit on the agreement. So we took this as a capital expenses. That's why it is disallowed.
Okay.
Do you get me? I'm not
Yeah, I
telling you
get
that
it
at all
now.
time now return a repair of tenant bedroom is a disallowable expense. If it's stated there that it is agreed, you see the clauses, you see the clause there. Is that clear?
Yes, ma, it's clear, ma.
Okay.
Thank you.
Do we have any other question? Does any other person have a question? I think we should close the class. Even me, I'm tired. But we just have to keep going. Azan Musa, you have your hands up. Please let's hear from you. Hazan Musa, please let's hear from you. Unmute and speak. Hazan Musa, are you on the call? Okay.
Ustaz, are you sleeping?
He or she is not on the call. Do we have any other question, please? Oh, in the absence of no other question, it's past 11. I'll still remain on this laptop for some time, but that's my business and is what I signed. In the absence of no other question, we will call it a day for today. Thank you for your time and God bless you. It's my earnest prayer
Thank
that
you
your
too.
labor will not be in vain in Jesus' name. Amen.
And you too. Amen.
Sorry.
Amen. Thank you so
Yeah,
much.
you're welcome. See you next Friday by God's grace, 7 p.m.
All right. Good night, ma. Thank you.
Good
Thank you
night.
so much. Good
Good
night.
night,
Yeah,
ma.
good
Thank
night.
you,
I will
ma.
share
Thank
the
Ma,
link
you.
to
drop
the
drop the note. Drop the note for us, please, ma.
Yes,
Thank
ma.
you.
Yeah, I will drop it. The notes will be dropped.
And
The
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 calculation. Thank
exec
you.
too will be dropped. Yes, I'll drop everything. All right. Good night.
Good
Good
night.
night.
Good night.
Please let's be guided. Eviction is done by phone number. Please don't use another phone number to submit. Please use the one that you are using on WhatsApp. So we avoid what happened last week, some of us.
Kabiru, I tell no you message her. Oh, you call her. You call the announce of the group say their lecturer laptop door off. Make the I first say I tell you. He said, "Ah, Madam Favor, yeah, senior. I said Jamila's laptop that went off. She was the one that set up the class. He said he get SBR. He said he get SBR. He dey teach SBR. Like he gets SBR now. Because if I finish my message, I never even come up for the
No, you started this with that too.
eh.
Now we start our pick.
Oh.
I reach out to that one saying whether if you have people tell me saying get lecture like right now, he say
I don't say I never hear Kabiru voice once, sha.
that one case I don't pick. They can tell me saying don't reach out to you.
Okay. I thought say like saying I me. It's okay. Kabiru funny, say help your sister. I don't want to miss my class. Next week now, my last
You
class.
good as you do it like this, so at least now I don't
Next week, my last class, education time. I don't do education time when we learn for when we prepare for ICANN. Now fresh learning, I want learn that. I don't know this new syllabus now they call column out. You know, so we just they put her under for my time that I will just they put her under CIT.
Yes,
But now
there small like that.
now in a big topic on your own.
2% of
The
accessible
accessible income. Yeah.
not
Not be chargeable income. Before capital allowance, that one they put am.
Okay, you don't do on your own.
You don't do on your own as topic. Go get English. All the people that they send the money give everything.
You see the quality. This new tax law. I never said to them, so I won't look anything.
Who she did this class? Did the class? So she joined the class.
Which class?
The task for accounting yard. Yeah, class I go buy course.
I be one by two, but
go buy record.
You know when I tell myself.
The one I did last time, never
Now
done
the same thing that they do. Management account, I don't finish and collect certificate. Financial statement, up till now, I never looked at that course. I got the only one where I finished that the tax academy last year. Not last year.
I need to finish. And they extend and go February.
That one I collect the certificate.
I try.
So but anything I want to God help me when I feel like this exam in December. That remaining part of December because the exam is like